If you're freelancing and you don't have a separate account just for taxes, you're already losing thousands of dollars. You just haven't been told the bill yet. Most freelancers treat every dollar a client pays them as money they get to keep. The ones who actually build wealth do the opposite. They treat a slice of every payment as money that was never theirs in the first place. That one difference is worth thousands of dollars a year. And it takes about 10 minutes to set up. Here's exactly what the mistake is, why it blindsides even smart, careful people, and how you shut it down before it costs you.
Here's the mistake in one sentence. Freelancers treat their gross income like it's their real income. Take Sarah, freelance graphic designer. $42,000 billed this year. She paid rent, upgraded her laptop, took a trip to Bali because she's her own boss now, and the money was sitting right there in the account. Then, April came. Sarah owed $6,800. She didn't have it. Here's the part that matters. Sarah isn't careless. She isn't bad with money. This happens to organized people, disciplined people, people who've never bounced a check in their life. Because the mistake isn't behavioral, it's structural. Quick question. Do you actually know what FICA is? Most people don't, because you never had to. Every paycheck at a job, your employer skimmed off income tax, plus something called FICA, Social Security and Medicare tax. You paid half, 7.65%. Your employer quietly paid the other half. You never saw it, never missed it. The system protected you from yourself. The moment you go freelance, that system disappears. Nobody withholds anything. Every dollar a client sends lands in your account whole, and it feels like all of it is yours. It isn't. Somewhere between a quarter and a third of it, depending on where you live and what you earn, already belongs to the tax office. It's just sitting there, disguised as your money, waiting for one specific week a year to reveal what it actually was.
And it compounds 3 ways. 1, you're paying double. Employees split their payroll tax with their employer. Freelancers don't have an employer to split it with. You're both sides of that transaction now. Which means you're covering a tax most people don't even know exists, on top of your regular income tax, not instead of it. 2, it's not due once, it's due 4 times. Most new freelancers picture tax season as a single April deadline. It isn't. Many tax authorities expect you to estimate and pay in installments throughout the year. Miss one, and you're not just late. You can rack up penalties on top of the tax itself, quietly, before you even know there's a problem. 3, by the time you find out, the money's gone. The cash that should have covered the bill doesn't vanish in one dramatic moment. It leaks out. Rent, software, groceries, normal life. $100 at a time, until the account that used to hold your $42,000 holds a fraction of what you actually owe. Stack those 3 together, and you get freelancers who did nothing reckless. No splurge, no bad decision anyone could point to. And they still end up staring at a bill they can't pay. That's not a math error. That's a missing system. Which is the good news, actually. Missing systems are cheap to install. Here's the one that ends this problem permanently. 1, pay yourself last. The second a client payment lands, move a fixed percentage, 30% is a safe default, into an account you never touch. Not when you get around to it, immediately. Treat it as gone because it already was.
2, separate the accounts. No exceptions. One account for business, one for life. The moment those two mix, you lose the ability to know what you actually have. A separate account isn't paperwork. It's the only thing that makes your real income visible to you. 3, put the deadlines on the calendar before you need them. Not the week they're due, the day you start freelancing. A penalty for a deadline you didn't know existed is the single most avoidable cost in this entire business model. 4, track deductions as you go, not from memory in March. Software, a home office, mileage to a client meeting, all of it can lower what you owe, but only with records. Reconstructing a year of receipts under deadline pressure is how freelancers pay more than they legally have to. 5, talk to a professional before you need one. One conversation with someone who understands freelance income specifically, not just tax season in general, tends to pay for itself several times over. Not because you're bad with numbers, because the default system was never built with you in mind.
Freelancing hands you something most jobs never do. Control over your time, your clients, your ceiling. But that control has a price tag most people don't see until it's due. The systems that used to run quietly in the background, without you, now have to be built by you, on purpose. The freelancer tax mistake was never really about tax. It was about a habit nobody told you to build. Build it once, and that number that used to wreck your April becomes exactly what it should have been all along. A line on a spreadsheet. Expected, budgeted, already paid for. If you're freelancing or about to be, the best time to fix this isn't next tax season. It's the next 10 minutes.